morning and thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of the global news flow. It's as volatile a market as it can get, both on the global side and the local side. So Jerome Powell yesterday didn't speak too much on the rate decisions, but did say that the Fed may have to make unpopular decisions to stabilize prices, but nothing too untoward. And because dealing desk might believe, or JP Morgan example believes that inflation numbers coming out on Thursday might be benign, that led to a bit of a bullishness for US markets. COVID has ripped through rural China ahead of the Lunar New Year migration. Microsoft reportedly plans to invest about $10 billion in creator of ChatGPT. The World Bank has cut 2023 GDP estimates to 1.7% and has warned of recession risk. Doesn't surprise anybody, I'm sure. And Tata nears Wistron plan takeover to grow Apple supply role. Well, clearly, India is putting its best foot forward in becoming a large Apple supplier. I remember yesterday or day before yesterday, Bloomberg had put out this news about how India's Apple shipments doubled in 2022 to $2.5 billion. Well, way to go, I say. Nevertheless, let's. What about markets at large? US markets had a decent outing in yesterday's session, a bit of a pullback. So about 1% higher for the Nasdaq, which was anyways higher day before as well. But the Dow and the S&P also came back into the green. The other cues, I think, the 10-year yield came off a little bit. S&P VIX came off quite a bit, and the dollar index just about flattish. It's interesting to see what happens to India VIX today, by the way. While global volatility is down, India volatility for the last 2 days has been up. Would be interesting to see if the same continues today or no. The SGX Nifty was pointing towards a mildly positive start at about 7:30 a.m. when we put out the update. Same, about 24 odd points, so hardly anything there. Circa 18,000 is what we may be looking at. Now, mind you, post yesterday's fall, dealing rooms are looking out for 17,800 as the lower level, but I still believe based on, and we went wrong yesterday because I said that the screen suggests that there's some more upside left, and we didn't have any upside yesterday. There's still seemingly some upside left, at least at the broader end of the spectrum, even if the Nifty doesn't behave in the best fashion. The Bank Nifty yesterday, in fact, breached the 50-day moving average on the downside on a day of the volatility increasing by 5.8%. And I do believe that remains the key index to watch if there has to be some upside, because IT, as we spoke about yesterday, has kind of capped the near term unless the others throw up a really meaningful surprise, and that might really be difficult. So especially after, remember, HCL Tech's mid-quarter commentary of they revising the guidance once again. So very doubtful that we'll have some big positive surprises from Infosys to really shore up the sentiment around IT. The mutual fund flows, if you saw them yesterday, highest flows into small caps, then into mid caps, then into large caps and flexi caps, clearly point towards there being some attraction for small cap stocks to continue. So it will remain a very bottom up market. Mutual fund flows, houses getting inflows into small caps. The deployment could happen into select small cap names. So don't look at the Nifty necessarily. The broader end is where the action might be. I do believe autos and metals preference is not changing despite what happened to the markets yesterday and the skittishness thereof. In fact, even on a day like yesterday, just look at this set of stocks which moved yesterday. It'll come up on your screen next. From a Tata Motors to a Motherson Sumi to a Sona BLW to a Hindustan Copper. It was just in some of the larger names, there was just this kind of move that came in on very good volumes as well. Clearly showed, and we spoke about this yesterday, the auto and metals remain the spaces to watch out for. And they clearly were the pocket to watch out for yesterday. I firmly believe that remains the case. And it's just logical because of the China reopening, the sentiment around some of these remains buoyant. Though I must say, Morgan Stanley came out with a note in today's session, or I post-market hours yesterday, let me put it that way. And they are talking about how they believe that despite this uptick that was seen, they believe they are constructive on Tata Motors, but they are underweight on Samvardhana Motherson because they are the key China plays. They don't believe, though, that Samvardhana Motherson slowdown in the EU and the US, which is about 35% and 18% of the FY22 top line, will offset any potential recovery in China. Well, 35 and 18 is a pretty large number, nearly 50% of the order book or the revenue run rate. And therefore, they are not constructive on Samvardhana Mothers. And remember, it's gone up for 2 days on a trot. Do watch out for some caution there. Okay, what about specific stocks to watch out for? The news flow isn't the strongest, but let me try and tell you what I have picked up at least as the key stocks to monitor today. I will watch out for maybe Adani Ports. The whole Adani group had a terrible outing in trade yesterday, but Adani Garot combined has completed the acquisition of the Haifa port. That's one to watch out for maybe. Adani Wilmar, the Q3 update, they've registered overall volume growth in high teens and value growth of high single digit. So not a bad set of number, you would have to argue. Let's wait and watch if there's some reaction thereof. PC Jewelers, it's not a stock that I track fundamentally, so I have zero idea about the recent numbers, but a 38% growth in the domestic turnover for Q3 doesn't seem to be a bad number. And ICRA came out with this note on the jewelry sector. It's a rating agency, of course, and they are saying that the sample set of their 15 major organized jewelers would actually record revenue growth of 20% in FY23. Of course, it's lower than FY22 numbers, but the industry growth is expected to be 15%. So no wonder the Titans, the Kalyan Jewelers, and now maybe even the PC Jewelers of the world are able to show up some good numbers. It'll be interesting to see the jewelry sector and the appetite thereof. They're not cheap stocks, especially Titan isn't. Maybe Kalyan might be relatively, but could be interesting to see what happens to the jewelry stocks once their numbers come out. The actual numbers come out. We know the sales numbers, but how have they gotten those sales and what is their commentary about Q4 could be interesting. Agarwal Industrial Corporation, Ashish Kacholia has increased his stake in the company to about 3.82%. So it's a stock that some HNI investors do like. It'll be interesting to see what the numbers for this one turn up. But Ashish Kacholia is as smart as investor as it gets, so he's upping his stake. So do watch out for that one as well. Bharti Airtel has been cut to underweight at JP Morgan. The price target is 710 rupees. So that is something that should be watched out for as well. It's probably the second brokerage to cut the target price. Just that in Bharti's case, they've cut, in JP Morgan's case, they've cut the rating to underweight, which is not what the previous broker I'm getting, which it was an MNC broker about 10 days ago. But nevertheless, be that as it may, just watch out for it. Could be an interesting one. Just trying to see if I've missed out on anything. There is CLSA note on LNT, a buy with a target price of 2570. Effectively, the second note to come out in 5 days, which is constructive on Larsen and Toubro. So you've got to watch out for that. The Axis and Max deal brokerages are constructive, so that is something to watch out for as well. And in terms of stocks that may have missed out, just trying to see. There's a cabinet meet at 10:30 a.m. today, so some announcements from there could be interesting. Lastly, watch out for the sugar names. There are newspaper reports today saying that ethanol blending of 20% will start from April, and that could be a trigger for all ethanol companies, not just sugar companies. So some of the others which are in the ethanol space as well could be, or biofuel space as well, would be interesting. There are 2 or 3 such names, so that's something that you may want to watch out for. Lastly, viewers, this is a big one. Actually, it's a packed day today in terms of big conversations, but I don't think it gets bigger than this. Howard Marks, as big a global name as it comes, talks about his latest memo and his views on investing in 2023 and slightly beyond in our new segment, Worldview, wherein we'll try and get you as many big and important and pertinent global voices, both from the market side and the corporate side. So do watch out for Worldview and do watch out for Howard Marks today. That comes in at 10 a.m. And then there are a bunch of other conversations, of course. There is also the conversation with the Citi research team on what they expect out of Q3. So that could be an interesting one. There's also a conversation that happened at Motilal Oswal, which will beam today. So that is something that is to be watched out for. Nilesh Shah and Ramdev Agarwal talk about the debt market and the equity market, both of them on the same platform. So it's probably the best combination to talk about both equity and debt together. So that is something that you might want to tune in for as well. Could be an interesting conversation. And of course, as I said, the City team. But Howard Marks is something that I'm really keenly watching out for, and would be lovely to have your reactions if you manage to see that conversation today at 10 a.m. on our brand new segment, Worldview. For tuning into Trade Setup today, thank you so much.